Are you guys wasting your time with this Wyckoff schematic, Wyckoff strategy, or is it something that can really help your trading? So what I'm going to cover in this video and really give you my honest opinion, because this is highly requested. I've seen a lot of people ask about this, and I just want to clear things up and make sure you guys understand that, something very important about trading. So definitely advise you to stick around. I'll see you in the video. Welcome back, guys. Harry here, known as Trade Chap, and in this video we're going to look at the Wyckoff schematic. And this is a highly requested video that people wanted me to make, and I'm going to give my honest opinion as to what I think about it and what it is, and basically do I think it is actually useful or not. Also, guys, before we start, if you're new here, welcome to the channel. Hope you can find some valuable content, and a free way to give back is if you guys could like this video. I'd really appreciate if you like this video. Helps get it out to more people, so potentially they're not wasting their time trying to learn Wyckoff. And yeah, leave a like, leave a comment. I read all the comments, and if you want to speak to me, have any questions, or don't agree with this, feel free to join the group and message me there. And yeah, you can follow me on Instagram. Really appreciate the support. Thanks. So basically, the Wyckoff schematic is just a schematic that was invented a long time ago, and you have to understand it was already invented in stocks and stuff like that. And the fact is that it's just repetition, something someone has noticed happened in the charts. So essentially it's an accumulation phase that could potentially call a reversal, right? So that's what you have to understand what it is, right? So all it is that it shows you when price is kind of weakening, and it could potentially show a reversal, right? So if we were to draw it out quickly, what would it look like? Well, essentially you have a downtrend coming into here, then you have the potential reversal that comes down, then you get this fake out, it comes into a range, starts ranging, then pushes up here, ranges at the top of the range here, and then you get the breakout. So essentially that is a Wyckoff schematic here. And what you have to notice about this is that it's really just price action. What do we see happen here, right? So this is what I want you guys to understand. You don't need to know this whole schematic to understand that, okay, there's something going on lower time frames. What we have here is we have this type of formation here. We can see how price is not starting to push down. So what we have is you have to notice what price has told us in this situation here, right? So first of all, on lower time frames, we have a break of structure. Now, Wyckoff schematic really plays out mostly on lower time frames, and that's where most people will see it. So essentially, yeah, we first have this break of structure here, showing us, okay, there's a potential move to the upside. But again, as I said, this happens on lower time frames. And on lower time frames, that's not really good confirmation, because as you know, as I show price action on this channel, you need, some sort of higher time frame candle, a 30-minute, maybe a 1 hour, or if you're even in a downtrend, a 4-hour candle, or even a daily candle showing you that it is closing bullish, indicating breaking the highs, indicating there is some type of support here to take candle towards the upside here. So seeing this on lower time frames, what you have to understand is that yes, it shows us that there's a break of structure. Then we try breakdown further here. Now this breakdown further here is going to be what people call, a stop hunt. It's not essentially a stop hunt. All it is it's a further liquidity grab to give this, move towards the upside. And why do we see that? Well, we're on a downtrend, right? So obviously people trying to get caught up in lower time frames are going to take buys in this area here, but that's not a smart idea. But once we see this move here, this is giving us confidence that, okay, price doesn't want to head back down, right? We don't see price heading back down here. It's struggling. This doesn't give you confidence to say that we're not still in a downtrend, right? This could be a deeper correction before further downside. But basically what we see here is we see, okay, price is now rejecting the lows. This is giving you a rejection back into the range. We see price accumulate, as you can see here, messes about. All of this SOS, BULPS doesn't really make things really complicated and can be subjective, because when you're trying to look for that exactly, it might not always show. So then all of this is an accumulation showing that price is slowing down and struggling to break down. Once we get the break of structure here towards the upside, we have the reversal, and then price is breaking outside of the range. Now, what do I always show on my videos? What do we always look for? Price, when you come to your session, look for your range, buys above the range, or if you're selling bias, sells below the range. Very, very simple. Don't trade in the range. Why don't you trade in the range? Unless you're buying from the bottom of the range, which would be the option from this point here, where, you know, when you break out and you have this test here, that would be buying from the bottom of the range, showing support. If we're in an uptrend, not counter trend, this is where it becomes dangerous. That's buying from the bottom of the range. Or if you have a range like this, make it very simple, guys. You don't need to make your trading more complicated. Forget all of this. Don't get caught in this fake out. Price closes above the range. Take this move here. Candle closes above, stop below here, and this is enough. Why is this not enough? You know, do you have to make it so complicated to understand all of this? No, all you have to know is price is in the range. If we're breaking outside the range, high chance we have continuation. And that's really what it is, right? More advanced you get at trading, the more you can look to enter in this area. Why do we enter from this area? Because we're buying from the bottom of the range. Where's our target? Well, our target's going to be the top of the range. Will you have to hold through all of this? Yes, most likely. That's why you don't play in ranges most of the time. So is Wyckoff worth it? Well, let's have a look. Let's go on the 5-minute time frame here. Remove drawings, and let's see if we can see a Wyckoff formation. Alright, 5-minute time frame, no Wyckoff. Is this Wyckoff? Nope, not really, because it's not counter trend. You know, do we have anything that resembles? I don't know, because it doesn't look like this image, so it's not Wyckoff, right? So we miss all of this. Is this Wyckoff? Maybe. Coming from a downtrend here, come back. But there has to be a retest to here, right? You can see there has to be this retest. Is there a retest? No. Does it change? Is it a reversal of trend? Yes, it is a reversal of trend. What do you notice? It doesn't follow the schematic exactly. But is this a Wyckoff schematic? Well, this is something similar. What do we notice here? Well, we notice something very, very interesting here. We have a range here to the upside. That's the top of the range. You can see resistance tested multiple times. We have here a support being made. What do we see here? Well, we see prices on a downtrend. We get the first reaction from support, makes the resistance. We see it come down, give that fake out, then closing back in the range, and now we see this accumulation. Again, what is it? It is just a rounding bottom, basically. You can see how price is just accumulating before switching trend. Now, what's going to be very interesting here is probably if I go on a higher time frame. So let's just circle this here, where we're probably going to be at a major support, and before we get this upside move, we had to form a candle like this. So let's check. So let's see. First of all, are we at a major support? So let's go on the 1 hour. So let's find where that circle is. There's that circle. And guess what? Oh, what a coincidence. We're at major support. Oh, that's not expected. Of course, that's why, guys. You have to understand, if price, where's your target? If price is closing below this range here, your target is going to be the bottom of the range. Where does price reach? The bottom of the range. You understand? So these wicks can't be neglected here. So what do we have before we have the upside move? Oh, guess what? We have a 1 hour candle closing bullish at support here. Where's the top of the range? Here. What happens when we get a 1 hour candle closing at the top of the range here? Oh, we get the continuation to our next target here. Do you need all of this Wyckoff? No. Do you need to be searching for Wyckoff? No. Trade what you see. I came to the charts. I see we're in a downtrend here. Price is looking at potential reversal, creating higher supports here. I can even go on lower time frames and look for an entry here. Here's my entry here. I see price gives a nice rejection, and then I see higher support formed. Target is at the top of the range here. I'm going to take this trade here, stop below here, target the top of the range. That's my trade, 80 pips. Is 80 pips not enough for you guys? Do you need to be, you know? So how is Wyckoff useful? Well, Wyckoff is useful to understand what the whole concept was. What did that guy notice? Well, he noticed when price is potentially reversing or showing a bottom, we normally see price come down, start to accumulate, the downtrend weakens. Look how strong the moves here when price is moving down. Then we see this big move saying, hey, I don't like this zone here, right? Be careful. This move here, this reaction should be like, hey, be careful selling in this zone, right? There's a big reaction here. We're at a reaction zone. We're at support. Target is already met. Do I really have to be selling more? No. Then what it does is it's like, okay, let me take one more because you guys are too stuck on lower time frame. You can see how, oops, price gives this move to the downside, which we are on a downtrend. So if you're trading, you know, price action, you could, I think still you'll be profitable in this trade, right? I mean, if this is the bottom of your range here, this is the candle closing below the range, stops above here. I mean, it's still a 60 pip move, you know, so you can still be profitable on it. But this is that once you see this reaction, it's like, okay, closing back in the range, okay. keep your eyes open because this is a possible rejection. Now you see how this formation, there's weakness towards the downside, right? So that's the only thing I find it useful. Should you guys trade Wyckoff? No. Should you understand that if price is showing you a spring reaction like this, a V shape at a zone, and this is the most important, is this V shape. You know why? Let me show you. If we have V shape type of reaction, then we see what? Continuation after. Let's go see what we have here. Oops. Oh, that's very interesting. What did we have here? V-shaped reaction, continuation. Oh, so the most useful, but we didn't have Wyckoff, we didn't have all of this, we didn't have all of that, we didn't have spring, all of that. No, the V-shape, this type of deep pull of liquidity to give you upside movements is what's the interesting part. Anyways, that's my thought. Probably gonna get a lot of hate about in this video, but I really wanted you guys to stop trying to look for setups, but trade what you see, not what you want to. I mean, you have to trade what the setup you want to see, but you can't trade, you know, looking for exact things. The markets won't always give you the exact thing you're looking for. You have to trade the option you have in front of you based on the strategy that you use and that you have back tested and have data on. With that being said, guys, gonna end it here. Thank you very much. Trade sharp, and until next time, peace.